You are a brave man for coming on today to talk about a lot of things that we've got going on. I realize that you are in a quiet period and can't talk about your actual results because you are reporting on March 6th. But we're going to try and thread the needle and get as much information as we can out of you. I know you had some very strong numbers that you reported for the November and December timeframe. Holiday season was very good for you guys. You had comps of 3.4%. You had strong traffic in the stores, and you had strong digital sales as well. How would you characterize the economy right now and how you all are able to play in that space?
Well, Becky, I think we saw a really strong holiday season, and it's reflected in some of the reports that you've seen so far. We felt great about our performance. Our comps, as you mentioned, up over 3%, very strong digital performance for the fourth year in a row, and traffic grew in our stores. So all around, a solid holiday performance, and we felt really good about the fact that literally in every one of our geographies we saw growth, and across every one of our major categories we saw positive growth during the quarter. So our team did an outstanding job of executing during the important holiday season.
You know, let's talk about the shift that investors have kind of recalibrated their thinking when it comes to retail stocks this week. That's because of what we heard from Walmart. Walmart came out and warned that it was going to be changing its digital strategy, that the digital growth that they had seen for the fourth quarter was not what they had seen for the three previous quarters. And that had a lot of people thinking, okay, bricks and mortar is really under huge assault from Amazon once again, and even the retailers that we thought could compete with them, maybe not. How are you all doing with your digital strategy? And I ask this because what Walmart said affected everybody. Your stock was down by about $4 on the day that Walmart came out with these numbers.
Becky, we continue to make great strides from both a physical and a digital standpoint. And again, as we just mentioned, we'll be up over 25% in the quarter. We've been doing that now for several years, and we continue to see great traction in both our physical and our digital performance. So it's a blend of both. And I think the winning retailers in the future are going to combine a great physical asset and physical experience with the ease that comes along with that digital interaction. So for us, it's a combination of both. And we've got to make sure that as we go forward, we provide a great physical experience and combine that with the ease that we're delivering through our digital fulfillment capabilities. And that's really where we've been focusing our energy.
Yeah,
we want to make it really easy to shop at Target.
Your strategy is Shipt. That's the acquisition that you all are making. And that will mean what? This is a delivery system that allows you to get same-door delivery to how many people from how many stores?
Yeah. So, Becky, let me try to unpack what we're doing from a fulfillment standpoint, because Shipt is just one of the different tools we're now bringing forward to the marketplace. So at Target over the last couple of years, we've tried to make it really easy for you to order from your desk or your kitchen, come by a couple hours later, and pick up in our store. We started a test last year in Minneapolis, a drive-up service, where you can place that order and conveniently drive into our parking lot, and within 2 minutes, we'll put it in your trunk. We'll expand that next year. In New York, we started to use our Grand Junction capabilities to actually allow you to shop one of our stores and at the checkout say, you know what, will you deliver this right to my home? And we'll have a courier deliver to you within the next couple of hours. And now with Shipt, we'll have personal shoppers, literally moms who shop for moms across the country in all of our major markets by the holiday season of next year. So we're really combining a number of different services to really make Target the easiest place in America to shop. So Shipt is the latest investment we've made, and we're seeing a great response as we roll that into new markets. And we'll combine that with order online, pick up in store, obviously 2-day delivery, the ability to order and come in and pick up that order. So any way you want to shop our stores, including shopping in one of our 1,800 stores, we want to make that a great experience for the Target shopper.
Hey, Brian, you've done, I know a lot on the employment engagement side. It's a big problem in our country. What are you doing unique at Target to get your employees and your team members, associates engaged?
David, when I think about our strategy today, it all starts with the investment we're making in our team. And whether it's the investment we've made with our merchants who are building the brands, our marketing team that's bringing this brand to life, the investments we've made from a digital standpoint or in our supply chain. But most importantly, we made a big decision last year that we were going to reinvest in our stores and increase hours, invest in training. We went into the holiday season hiring over 100,000 new team members. And importantly, we went into the season saying we're going to increase our wages with a path by 2020 to get to $15. So we're really making sure that everything we do starts with that investment in our team. And I couldn't be happier with the response we've seen. We placed a big bet on our stores. A lot of people questioned the direction we were taking. Well, those investments in our stores paid back big in the fourth quarter. And it's our store teams that drove our sales, both our physical sales, but also they enabled all of those digital sales that we drove in the fourth quarter. So everything we're doing right now starts with the investment in our Target team.
Hey, Brian, let's talk about the digital sales, though. We had Jerry Storch on this week, and he's a former retail executive, worked at Target for a long time, was a top guy there in charge of the fulfillment and everything. He was talking broadly about retail, not specifically about Target, but his point was we want to see more and more digital sales. That's what Wall Street is kind of clamoring for. But as we see those things, that's a much lower margin business. Does that mean that overall we're going to have to live with lower margins and less profitable business as brick and mortar retailers try and keep up with the Amazons and make sure that they are able to deliver online digital sales too?
Well, again, Becky, we're going to see a balance of both. And for the foreseeable future, the majority of U.S. retail sales will still take place in a store. And we'll continue to see the acceleration of digital. But when I talked about some of the things that we're doing, it's store-enabled. So it's not just delivering that package to somebody's doorstep. It's letting them order online, and then they're coming to our store to pick that up. Over the balance of this year, as we expand Drive Up, they're coming to our stores, and one of our team members will walk from the store out to the parking lot, put it in their trunk. We call that a digital sale, but it's really enabled by our stores. So the stores still become a point of leverage. They become the hub that really connects our brand to the guest. And that's a much more profitable interaction as we go forward.
We had Gene Munster join us at the end of last year, I think, and he talked about how his big idea is that Amazon will buy Target. He didn't have any inside information on any of this. He just thought it made sense because he thinks Amazon is going to need a way to have a lot of stores around and a lot of ways to reach people, too. We haven't gotten the chance to ask you about that report. What did you think of it?
Well, I started out by saying, Becky, it must have been a slow news day. But obviously, you know, when I look at that report, to me, it validates our strategy and everything we've been talking about for many years now, that success in U.S. retail is going to be that combination of stores and digital. And I think we're just uniquely positioned. Target's one of these unique and very iconic American brands. We deliver both style and essentials. We now have great stores and a digital capability. We deliver a great experience and value. And we have this great multi-category portfolio. So when I heard Gene talk about that, to me it was just a validation that everything we're doing at Target is on track. And the winning retailers are going to have to combine both a great physical experience and a digital capability.
Hey, Brian, speaking of physical experience, you know, how are your new formats going, and what's the new Target's going to look like in the future?
Yeah. David, they've been really well received. I was actually in Chicago with my leadership team last week. We did some in-home immersion work, just talking to consumers. And they were talking to us. They were talking to me about the great new experience when we've remodeled a store. And we're seeing that across the country. Last year, we remodeled 110 stores. Next year, we'll triple that. And every time we remodel these stores, we see a great sales uptick. But importantly, we see a great reaction from the guests. They love the new experience. Our team's proud to work in that environment. So the remodels have been well received. We'll accelerate next year. And these new urban stores that we've opened up, like Herald Square in New York or on the college campus of Texas, these college stores and these urban stores are bringing us into new neighborhoods. And there's a lot of excitement as we open up these new formats in New York and Boston, Chicago and Los Angeles, and on college campuses across the country. So it's bringing us into neighborhoods and catchments where we haven't participated in the past, and the consumer's saying, thank you, Target, for coming to town.
Hey, Brian, have you gotten to the point where you're looking at wages and wage pressure and thinking about margins? And I mean, have we hit that point where CEOs are going to start thinking this is on my radar now, I got to worry about this?
Joe, it's certainly been on our radar. And as I said earlier, we took a very proactive stance. We increased our wages when we went into the fourth quarter. We made a commitment that we're going to get to a starting wage of $15 by 2020. So that's built into our model, that's built into our plans, and it's absolutely the right investment for us to make in our team.
You don't insist on employees when they refer to you saying, "Oh, great one," right? Like Novak did for all those.
That's not true, Joe.
What's the name
That's
of your?
my grandfather name. My grandkids.
But what's the name of your website? It's OGO.
Ogo, but not a great one, big guy. Okay, come on.
Oh, okay, all right.
Hey,
never
by the
mind.
way,
All right, I
Brian,
retract the question, Brian.
You need to listen to the podcast I did with Brian. And one of the things I do with the podcast is try to give the wisdom that you can gain by seeing how people grew up in their careers. And, you know, he's got a great story, but I think the big thing that he brings forward as a leader is humility. And all the great leaders have the humility that say, "I need you," tells their team members, I mean, "You're important." And I admire Brian for that leadership.
Great.
I don't see how "oh great one" it means
I'm trying
humility.
to segue.
I don't. I just don't. That humility in "oh great one." Anyway.
Sorry about that, Brian. You know.
Brian, thank you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.